Welcome back. So today we're looking at Tether's Q3 2025 numbers. The attestation highlights the $10 billion year-to-date profit, their massive US Treasury pile, and this push into new areas.
Yeah, and the source material is, well, it's packed with detail, really strong in the facts. But the challenge, I think, is making the analysis just as big, just as significant as those numbers.
Right, you can't just list off billions without digging into the so what. It's got that high level of financial data, but needs that analytical layer to match.
Exactly. The scale profit, reserves, it's genuinely staggering. So the critique has to reflect that sophistication, moving past just reporting into the real consequences.
Okay, so let's dive in. A big theme, obviously, is the scale of their balance sheet, specifically those sovereign debt holdings.
Right. And while the scale of Tether's US Treasury holdings is definitely stated, the material really needs to robustly contextualize the financial and regulatory meaning behind that position.
It mentions the $135 billion in treasuries, right? Puts them ahead of South Korea, number 17 globally.
Which is, I mean, that's a massive fact. Huge.
It really jumps off the page. But I guess the question is, for the kind of sophisticated reader this is aimed at, is just stating the rank, is that enough? The $135 billion itself is already pretty impactful, isn't it?
It is impactful, yeah, but the way it's presented now makes it feel a bit like a standalone bragging right almost.
Okay.
The weakness, I think, is that for an expert audience, simply giving the rank misses the crucial stuff, the implications of concentrating so much in sovereign debt. Especially, considering they haven't really been active in USD markets, and now they're planning this reentry.
Okay, so that's the gap. Connecting the metric to the market reality, the strategy.
Precisely.
So the suggestion then is to really weave that financial metric into the broader market strategy, the regulatory picture, really spell out the relevance, give the reader that so what.
Yeah, that's what elevates it from just good reporting to essential analysis.
Because otherwise, the reader's left wondering, right?
Exactly. If you don't explicitly link that $135 billion to the regulatory climate, especially with the USAT launch coming, the reader will ask, okay, is this huge pile of US debt an asset or actually a liability when US regulators look at it? You've got to get ahead of that.
Okay, so let's talk concrete ways to do that, structurally.
Well, one way is just to directly connect the $135 billion holding to that regulatory scrutiny in the U.S. Given USDT is planned, Tether's news U.S. stablecoin.
Right. Ask the question directly in the text. How might this concentration impact get approval? Or how regulators see the systemic risk? Do it right there before the reader finishes the paragraph.
Or you could look at the risk trade-off. Explicitly weigh the benefit, the yield they're getting from treasuries, which, let's face it, drives those profits.
Yeah, massively.
Weigh that against the concentration risk, within the total $181 billion or so in reserves. Is this concentration the secret sauce for their profit, or is it like a ticking time bomb in terms of systemic risk?
Highlighting that tension. I like that. It adds immediate depth.
Yeah.
And maybe even just reframing the number itself. Instead of just comparing the $135 billion to what countries hold, what if you compare it as a percentage of their own reserve base? To really hammer home that this isn't just a big number, it's like the main engine of their profitability.
That's a good point, making that link structural, saying this percentage is why they're so profitable. That really strengthens the argument about their financial setup.
Okay. And that focus on profitability, on where the money's coming from, it leads straight into the next point, doesn't it? What are they doing with all that profit?
Yes. The material right now kind of lacks a smooth, integrated story connecting the core USDT profitability to these, seemingly quite different investments in AI, energy, that sort of thing.
Yeah, it feels like a narrative disconnect. It lays out the massive profits brilliantly, over $10 billion YTD, $17 billion USDT issued just in Q3.
Huge numbers.
But then it jumps to talking about putting money into AI, energy, P2P communication. It feels abrupt, like a pivot that isn't fully explained.
It almost reads like two different documents got stapled together, One about running this incredibly profitable stablecoin machine.
Right.
And another about Panama running a VC fund. The weakness, structurally, is that the link between we make money issuing stablecoins, and so we're investing heavily in AI it's underdeveloped.
It comes across as maybe opportunistic rather than deeply strategic.
That's a good way to put it.
And the audience, they get that Tether has cash to splash, but they need the why. Why these specific investments? Why now?
Exactly. So the suggestion has to be about sharpening that focus. Clearly show how these investments, whether it's AI or energy or P2P, how they directly support the long-term health, the growth of their whole digital dollar ecosystem.
Or maybe act as a hedge against stablecoin market saturation down the line.
Right, or that. But if it doesn't clearly tie back to supporting or hedging the core business, the reader's going to question the strategy, the focus.
So how do we make that connection clear? Actionable suggestions.
Well, you need to use the financial facts you already have as the bridge. One idea, structurally, use that $6.8 billion in excess reserves, the money that's not strictly needed for backing USDT.
The buffer.
Yeah, use that as the natural transition point. Explicitly say, these investments represent the strategic allocation of this excess capital needed to sustain growth for our 500 million users.
Okay, that frames it as financially intentional. It argues that if they don't reinvest this excess cash now, they risk stagnating or maybe losing ground later. Makes the pivot feel less random.
Exactly. Or another way, focus on specific examples, the mechanics, like the investment in P2P communication. How exactly does that improve the infrastructure that's supporting the $174 billion in circulation?
Show the synergy.
Yeah. Ask and answer that question right there. If you show how investment A strengthens core business B, you justify the spending. It becomes proof of concept.
And what about future-proofing? You mentioned the CEO's big profit prediction.
Right, the $15 billion full-year profit target. That's another strong angle. You could connect these investments directly to that. Argue that these diversification plays are actually the necessary next-generation revenue streams.
To maintain that incredible profitability, what was it, estimated near 99%?
Almost, yeah. So you frame the AI and energy bets as essential to keep hitting those kinds of numbers long-term. It provides that crucial forward-looking justification.
Okay, so linking profit to strategy seems key there, which actually brings us to the final point, dealing with just how extraordinary these financial claims are.
The audacity of them. Really, the numbers are so big, the claims so high, that to avoid expert skepticism, they need to be structurally underpinned right away with supporting financial logic.
This is definitely the eyebrow-raise zone. You've got the CEO projecting nearly 99% profitability, suggesting a rumored $500 billion valuation would actually undervalue them.
Hold on. Yeah, $500 billion for a stablecoin issuer? I mean, that's a staggering number in any context.
It is.
These are really high-stakes claims. And the weakness here is that they just need more explicit backup in the text than they currently have. Otherwise, for a sharp reader, they risk sounding like, well, marketing hype, not serious financial assessment. Without the immediate math, it's hard to swallow.
Okay, so the suggestion is clear. Build in a dedicated section or at least a clear paragraph that directly, methodically links the known metrics, like the yield on treasuries, the issuance volume, to the reasoning behind those sky-high profit margins and valuation ideas.
Give the reader the math up front. Let them see the logic before they dismiss the claim.
So, concrete examples for that?
You could do it almost immediately. Use that fact, $17 billion USDT issued in Q3. Right there, calculate and show the kind of yield that generates on the new assets they bought.
Right before or after the CEO quote?
Exactly. Do it right there. Justify the nearly 99% profitability claim with the numbers before the reader even has a chance to doubt it. Then the quote lands as a conclusion based on data, not just, a wild prediction.
That makes sense. And for the valuation? The $500 billion?
You could tie that back to the CEO's stable company concept, and again, that's $6.8 billion in excess reserves. Frame the valuation not just on current assets or profits,
But on the perceived reliability. The systemic stability they offer?
Yes, emphasize that maybe traditional valuation models just don't capture the unique market position, the dominance they have. Argue that their value comes from being this perceived bedrock.
That speaks to their unique role, doesn't it?
It does. And one more angle, use contrast. Highlight this incredible profitability, this strong performance, despite them being largely absent from huge markets like the US and EU.
Show that this unique global dominance, outside the usual frameworks, is what justifies such a high valuation multiplier.
Precisely. Their unique market position is the multiplier. Define that clearly.
Okay. So, wrapping up, the underlying material here is strong. The facts are impressive. But figures this unprecedented really demand an equally sophisticated structure in the analysis to support them credibly.
Yeah, it's about making those connections explicit. Don't rely on the reader to mentally bridge the gaps between Tether's core business, the regulatory world, and where they're heading strategically. Spell it out.
So just to quickly recap the three main opportunities for refinement we discussed. First, really integrate the context around those massive US Treasury holdings, the $135 billion, to show its regulatory and financial weight.
Right, the so what of the treasuries.
Second, unify the narrative. Structurally connect the core profits from USDT to those strategic investments in AI, energy, etc., making the why clear.
Make the diversification feel strategic, not random.
And third, bolster the support for those extraordinary claims, the near 99% profitability, the potential $500 billion valuation, with immediate explicit financial logic right there in the text.
Yeah, show the math behind the magic numbers.
Apply those suggestions, and I think the material moves from being great reporting to really profound analysis of a major, maybe even unique market force.
Excellent. Well, we definitely look forward to seeing the revised version. Please do feel free to submit the work back again for more feedback.